Good morning, folks. Welcome back. Happy Wednesday. And if you get hot and bothered by semiconductors and artificial intelligence and the next wave of personal computing and quantum computers and all of that, NVIDIA is the subject matter for you. So NVIDIA has been the top performer in the NASDAQ. It's carried the majority of the market as far as momentum, right? So it's one of those stocks that has just grossly outperformed everyone else in the U.S. market, even within technology. I actually, when I read that this morning, that it's the top contributor, I hadn't really sliced and diced up the return profile of the indices at this point, but I was assuming just kind of off the cuff that Microsoft or Facebook was a heavier of a component of return, but it is in fact NVIDIA. The company has surged over 200% in the year, very much so on the secular wave of semiconductors, computer chips, silicon doing extremely well. Through COVID, right? The demand on technology, the demand on personal devices, the pace at which consumers buy these personal devices through the smartphone revolution and through online gaming, heavy computing, social media. This stuff is on fire and has been. It has just been one of those names very much in that universe of the Teslas of the world, the WeWorks of the world at a certain point, where the stocks are just so unbelievably hot, people don't know what to do. Shopify, right, had kind of its moment now and again. But I'll have to admit that NVIDIA touches that territory of overhyped stocks for me, where my brain just starts to act like they don't exist. And this has happened to me in Tesla. I mean, I have been in and out of Tesla, and basically in both turns that I've owned the stock, it's generated returns, which says what it says about the stock. But it has always been a company that I'm not a car expert, I'm not an alternative energy expert, and when I do dabble and try to do my research and figure out if the company is worth buying, if it's at a fair value, I just end up scratching my head completely, and I fall back on a investment rule that I have, which is if you don't feel like you understand it, don't touch it, for the most part, unless you're exposed to it, right, through an index ETF or something along those lines. But the semiconductor world has been a little bit like that, right, especially in comparing one company to another, not on a financial basis. That's fairly clear, right? How much are they selling? How much are they borrowing? What are their margins? What has the historical growth been like? You can compare them by the numbers in a pretty good way. But the subject matter is so complex and yields so much return technologically that any given year or any given model of a semiconductor chip that's rolled out in a sub-industry within tech. So maybe it's the chip for phones, maybe it's the chip for laptops, the chip for video game consoles, which I think are starting to kind of head in a different direction, could create a massive win for said company and sort of reframe the entire industry, right? Like Qualcomm could come out with one chip or Intel come out with another on the following year, and it could really reshuffle who's winning the game. We've sort of seen this, especially through the degradation of Intel over the years. Intel used to be the big boy player. They still very much are, but I think once they started losing the Apple contract, Apple started developing in-house silicon, we saw a little bit of a schism, and very much that's led NVIDIA. And to be honest, it's difficult to even judge how they compete, right? Some are more for mobile, some are more for others. So it's a space that is so noisy that I have typically stayed away from it unless I'm getting exposure through an ETF or a thematic ETF. And that leads me to the subject of today's video, which is thematic investing. NVIDIA is very much in this, right? If you believe in high-level computing, cloud computing, more intensive use of smartphones, headsets, technology that demands more processing power, definitely a very strong trend. You're going to be getting into these semiconductor companies, right? And that's what happens. You have a top performing stock in the entire market. A stock doesn't outperform the entire market, every single name in the market, because of, and to be clear, I'm actually not sure if it's outperformed more than every single stock in the market, but it has been the largest contributor to performance. That's an important distinction. But what I'm saying is a company doesn't only achieve that by being right? The majority of investors aren't correct most of the time, right? Most investors are wrong almost all the time. And so there is a massive element of thematic excitement, right? I think it's mostly leveraged through artificial intelligence and the rise that we've seen this year, the demand for it to be integrated into other systems. So on one end, I think there's quite a bit of fluff. Probably a thick slice of that return comes off of that fluff. And you can actually dig in and do an attribution and see where that return is coming from using some fancy models, but we're not going to do that. I'm just, from experience, there is a massive degree of fluff here. And if economic conditions change drastically enough and perceptions change, that fluff is going to come out of NVIDIA. So this is a very high volatility stock. And just before the earnings, the options that are written against NVIDIA are pricing in a 10% move in the stock price based on their earnings report. So there's a lot of kind of gamblers behind this. There's a lot of speculative investors behind this. There's a lot of overzealous, especially with these market conditions. So NVIDIA is, a fantastic company. I think they're going to continue to grow. They're going to continue to sell. Their previous earnings indicated a lot of strength, right? This isn't a company that hasn't shipped a product and everyone's overhyping. And we've certainly seen that in the market before. This is a fantastic company, but is it the right time to get into it? It's very precarious. There's a lot of fluff baked into the price here. There's a lot of speculators driving demand behind it as well. And it all is pretty contingent on the macro, which is the U.S. actually, the U.S. continuing to have a strong economy, strong economic demand, strong growth. If that evaporates because interest rates are high and then sentiment suddenly flips and people want to liquidate their assets and save money or pay bills, etc., you'll see that fluff evaporate in the market. I don't mean to be a doomer surrounding NVIDIA. I certainly, at this point, I'm sort of shaking my head like I need to get into this name at some point. We'll figure out when. Hate to miss the boat long term on some great technology businesses, but there's a lot of fear out there. I mean, Mike Wilson of Morgan Stanley continues to be bearish. He's been sort of the laughing stock of the strategists, in the sense that whoever went bullish this year won, and if you've been a bear for the whole year, you're kind of sitting out there shouting "old man yells at cloud" kind of beat. I mean, I'm a big fan of his. And so for that reason, I remain fairly cautious here, but it's something you don't want to stick to your guns for too long. Otherwise, you start to miss some great opportunities. So NVIDIA, thematic investing, it's a little bit dangerous, can get a little bit spooky, but that's what we're here for, to sort of point those things out for you. So let's look out for those earnings. Let's look out for the rest of the week. We have some interesting things to watch for the rest of the week. Thursday, U.S. initial jobless claims, Jackson Hole meeting. This is where the people who care about the central bank and the Federal Reserve, and Jerome Powell himself, will speak. And it's historically been this quiet but interesting meetings where people do sort of express their real views on this. And then Japan-Tokyo CPI Friday, so inflation in Japan on Friday. I don't know how many of you will tune into that. And then consumer sentiment from the University of Michigan. That report comes out on Friday as well. That's it. Jackson Hole again, Friday. Everyone's going to talk. Christine Lagarde, Jerome Powell. So we'll get, the U.S. and European view on the economy. And it will drive markets when we see that the following week. It certainly will. It'll give people a little bit of a pivot. To touch on cryptocurrencies, since we're wrapping up like that, Bitcoin was a little changed. It took kind of a beating over the last week. A lot of fear surrounding regulation, a lot of nervousness surrounding some sort of whales transferring coins to Coinbase, Vitalik Buterin sending a substantial amount of money to Coinbase, and people assume that it's for extraction, for withdrawal, and some other creators as well. I know there's some drama bumbling with the founder of Binance, which the saga continues ever since SBF was arrested. He's kind of been under everyone's radar as a litmus test for how real is this space, and how much confidence are there in these large exchange type institutions. And then I will close out with bonds. Right, bonds have had their yields spike up. People are buying. There is a belief that the Fed may pause rates, and so that would send bond prices up and yields down as well. So it's becoming a little bit more of an exciting space, and with yields near 5%, they finally do have a place in the portfolio, I must say, after decades of it just not making sense really to hold fixed income. That's it, guys. We will catch up on Friday, wrap up the week, see how these NVIDIA earnings come in, and be back on Friday. Take care, guys. Let me close this out.